Imagine it's Friday afternoon. Your paycheck hit this morning. You stop for groceries on the way home, tap your card, and it gets declined. You try again. Declined. You open your banking app and see a message that makes your stomach drop. Account restricted. No warning. No clear explanation. Your rent is due. Your car payment is set to auto-draft overnight. And the bank's first answer is the one nobody wants to hear. Your account is under review. Now here's the part that surprises a lot of people. In the United States, a bank sometimes really can freeze access to your money before it gives you any advance warning. But that does not mean the bank can do anything it wants. And it definitely does not mean every freeze is legal, fair, or permanent. By the end of this video, you'll understand when a bank can usually restrict your account, when the law may protect part of your money, what warning you might get later instead of sooner, and the exact steps that can help you protect yourself before a bad situation gets worse. The first thing to understand is that people use the word freeze to describe several different things. And that causes a lot of confusion. Sometimes the bank puts a hold on one deposit, sometimes it restricts the whole account, sometimes it closes the account but still owes you the remaining balance after certain issues are sorted out. And sometimes it is not the bank making a business choice at all. Sometimes the bank is responding to a court order, a tax levy, a fraud alert, or a federal sanctions rule. That difference matters because the reason behind the freeze usually decides what rights you have next. Now let's start with the answer most viewers want right away. Can your bank freeze your money without warning? In many situations, yes. But the better question is this: why did it happen? If you ask the first question only, you miss the most important part. The reason is everything. One common reason is suspected fraud. Suppose you deposit a check that later looks suspicious, or a large transfer hits your account that doesn't match your usual pattern. Or the bank's systems think a mobile deposit may be fake, altered, duplicated, or tied to a scam. In that situation, the bank may restrict your account while it investigates. Sometimes it freezes only the suspicious amount. Sometimes it blocks the whole account for a period of time, especially if the bank thinks outgoing payments could make the problem worse. And this is where many people get confused. The bank may not tell you much. That feels shady. But sometimes the bank is legally limited in what it can say. Federal anti-money laundering rules require banks to report suspicious activity in certain cases. And federal regulations say a bank cannot disclose that it filed a suspicious activity report, often called a SAR. So if the account review is tied to suspicious activity monitoring, the bank may give you only a vague answer like account under review or unusual activity detected. That does not automatically mean you committed a crime. It can mean the bank's system flagged something that needs a review. Those are not the same thing. A false positive is still possible. But the practical result can feel the same when you are locked out of your money. There's another detail that often gets overlooked. A deposit hold is not always the same as a full account freeze. Under Regulation CC, banks can extend holds on certain check deposits in specific situations. For example, new accounts, very large check deposits, redeposited checks, repeatedly overdrawn accounts, doubtful collectability, and certain emergencies can justify a longer hold. In those cases, the bank generally has to give notice and explain when the money will be available. That is different from freezing your entire account because of suspected fraud or a legal order. So if your bank says funds are on hold, ask whether the issue is just one deposit or the entire account. That one question can save you hours of panic and confusion. Now suppose the problem is not fraud at all. Suppose a creditor sued you, won a judgment, got a garnishment order. In plain English, that means a court allowed money to be taken from your wages or bank account to pay a debt. If the bank gets that order, it may freeze money in the account up to the amount required under the order and the law that applies. In many cases, the first real shock comes at the account level, not before it. The warning may have happened much earlier in the lawsuit papers you ignored, missed, or never fully understood. That's why people say the bank froze my account with no warning, even though the legal process may have started weeks or months before. The bank is usually not deciding from scratch. It is reacting to a legal command. But that is only part of the story. A garnishment freeze does not mean every dollar in the account can always be taken. Federal and state exemption laws matter, and some of the most important protections involve federal benefits. If certain federal benefits are directly deposited into your account, the bank must generally review the account and protect 2 months' worth of those direct deposited benefits before freezing or garnishing money under a court garnishment order. That can include benefits like Social Security, supplemental security income, veterans benefits, certain railroad retirement payments, and some federal retirement payments. That automatic protection is a big deal. But here's where many people make a costly mistake. They assume all benefit money is automatically protected, no matter how it got there. That is not always true. If your benefits came by paper check and you deposited the check yourself, the automatic 2-month protection may not apply in the same way. You may need to claim the exemption in court and prove where the money came from. So direct deposit is not just convenient. In some situations, it is what triggers automatic protection. And there's another exception many people don't know. Certain government debts can reach money even when ordinary creditors could not. For example, federal agencies may have power to collect some debts without the same court process used by private creditors. Child support is another area with special rules. So if someone tells you benefits can never be touched, that is too broad. The source of the money matters, the type of debt matters, and the law behind the collection action matters. Let's say, instead of a private creditor, it's the IRS. That is a different animal. If the IRS levies a bank account, the funds in the account are generally frozen as of the date and time the levy is received. And then there is usually a 21-day waiting period before the bank sends the money to the IRS. That waiting period exists to give you time to contact the IRS, arrange payment, or point out errors. So even if the freeze feels sudden, there may still be a short window to act before the money is turned over. If you ever learn that the issue is an IRS levy, do not waste time arguing with a frontline bank employee about fairness. Your fastest move is to contact the IRS immediately and start documenting everything. Now let's talk about a reason that shocks people because it feels personal. Suppose you owe the same bank money on another debt, maybe a car loan, maybe an overdue line of credit. In some situations, the bank may use money from your deposit account to pay a debt you owe that same bank. This is often called the right of setoff or right of offset. Whether the bank can do that usually depends on your deposit agreement, your loan contract, and applicable law. This is one of those rights people often agree to without realizing it, because the language lives deep inside account paperwork nobody reads. But here's the important limit. This power is not unlimited. The Office of the Comptroller of the Currency has said federal law limits offset in some cases. One example the OCC gives is that a bank generally cannot offset a deposit account to pay a consumer credit card account. So if a bank takes money from your checking account to cover another debt you owe that same bank, the first thing you want to know is what contract language they are relying on and whether that kind of debt is even eligible for setoff. And suppose the money in the account came from Social Security benefits. That adds another layer. The OCC says that in some cases, depending on the account agreement, a bank may offset funds even when the account contains Social Security money. That means you should not assume the words Social Security automatically end the discussion. If this happens, tell the bank immediately where the money came from, review the account terms, and escalate fast if the explanation does not make sense. Now, here's a freeze scenario that has nothing to do with debt and nothing to do with crime. Bank error. Choosing debt. Imagine the bank accidentally credits money to your account that was supposed to go to someone else. Maybe it was a mistaken deposit. Maybe a teller error. Maybe an internal posting mistake. The OCC says a bank does not need your permission to remove funds it deposited by mistake. And the OCC also says the bank may temporarily freeze your account to prevent withdrawals before the error is corrected, as long as the frozen amount does not exceed the mistaken deposit. In other words, if the bank made the mistake, it can still move quickly to protect itself. That frustrates people because it feels like the bank gets to break the rules and you live with the consequences. But legally, a mistaken deposit is not free money. The better lesson is this. Do not spend money just because it suddenly appears in your account if you do not know exactly why it is there. There's another rare but real reason for frozen funds: federal sanctions. If funds are blocked under Treasury's Office of Foreign Assets Control, often called OFAC, the money can be frozen. OFAC says an institution may notify the customer that funds were blocked, and the customer can apply to have the funds released. Most viewers will never deal with this, but if your bank mentions blocked funds, sanctions review, or OFAC, understand that you are no longer in an ordinary customer service issue. You are in a specialized federal compliance process. So yes, there are several legal pathways to a freeze without advance warning: suspected fraud, garnishment, tax levies, setoff, bank error, sanctions review. And in each one, the bank's power comes from a different source. But don't take that to mean banks always get it right. In fact, regulators have publicly punished banks for freezing or garnishing funds the wrong way. The Consumer Financial Protection Bureau said Bank of America unlawfully froze customer accounts, charged garnishment fees, and turned over money based on out-of-state garnishment orders that should have been handled under the protections of the state where the customers lived. According to the CFPB, at least 3,700 out-of-state accounts were unlawfully garnished, and customers paid at least $592,000 in garnishment fees. That matters for one reason above all others. It proves that the sentence "the bank froze my account" is not the end of the legal analysis. Sometimes the freeze itself may be improper. And there's more. The CFPB also said Wells Fargo froze more than 1 million consumer accounts based on a faulty automated filter that flagged possible fraudulent deposits, even when the bank could have taken less harmful action. Customers affected by those freezes were unable to access any of their money for an average of at least 2 weeks. So if you feel powerless when a bank says the system flagged your account, remember this. Automated systems can be wrong, and regulators know that. Now the practical question, what should you do in the first hour after you discover the freeze? First, stop guessing. Do not keep trying random transactions. Do not move into panic mode and start telling everyone the bank stole your money. Get specific. Ask the bank whether the issue is a deposit hold, an account restriction, a full freeze, an account closure, a garnishment, a levy, a fraud review, or a setoff. Those words are not interchangeable. If the representative gives you a canned answer, ask again in a simpler form. Is this because of suspected fraud, a legal order, money I owe this bank, or an internal mistake? Second, ask what amount is restricted. Is the whole balance frozen, or only part of it? Sometimes only one deposit is unavailable. Sometimes only the amount tied to a levy is locked. Sometimes the app message makes it sound like the whole account is gone when that is not true. Third, ask whether any written notice has been sent or will be sent. If the freeze is tied to a garnishment, levy, or account action, written notices may matter later. Save screenshots of your app, any emails, texts, and the exact time you discovered the problem. Fourth, review your recent activity before you call back. Did you deposit a check, open the account recently, receive an unusual transfer, miss payments on a loan from the same bank, get sued over a debt, receive IRS notices, spot a deposit that looked wrong? The more context you bring, the faster you can narrow the cause. Fifth, if federal benefits are involved, say that clearly and early. If your Social Security, SSI, VA, or similar benefits were directly deposited into the account, mention that. If a garnishment is involved, those details can matter immediately. If the bank already froze funds above what should have been protected, you want that issue on record right away. Sixth, if the problem may involve an unauthorized electronic transaction, report that immediately. Under CFPB guidance, after you notify your bank, it generally has 10 business days to investigate, and in many cases, you should report unauthorized withdrawals no later than 60 days after the statement was sent to preserve stronger protections. If your debit card, PIN, or security code was lost or stolen, moving fast can sharply limit your possible losses. That's a big point people miss. Sometimes a freeze begins because the bank thinks it is protecting you from fraud. If that is what happened, your rights may look very different from a creditor freeze or a tax levy. So what mistake do most people make here? They argue at the wrong level. If the issue is a garnishment, they argue with the bank instead of looking at exemptions in court procedures. If it is an IRS levy, they fight with customer service instead of contacting the IRS during the 21-day window. If it is a suspected scam deposit, they demand instant release without providing documents that show the transaction is legitimate. If it is setoff, they insist the bank can never touch their account without checking the contract they signed. The better approach is to match your response to the type of freeze. If it is a garnishment by a private creditor, read the notice carefully, look for exemption forms or deadlines, and act fast. If protected benefits were involved, raise that immediately. If state law protects additional amounts, find out how to claim those protections. If it is an IRS levy, contact the IRS right away. The clock matters. And if the levy was erroneous and your bank charged fees because of the error, the IRS says reimbursement may be possible in some situations. If it is set off by your own bank, ask for the exact contract basis. Ask which account agreement or loan term they are relying on. Ask whether the debt involved is the type for which set-off is allowed. Ask for the explanation in writing if possible. If it is a fraud review, gather proof. That may include pay stubs, invoices, screenshots, deposit receipts, contracts, or communication showing why the transaction is legitimate. You are trying to reduce uncertainty for the bank's investigators. If it is a bank error, identify the posting problem and demand a clear accounting. A temporary freeze tied to the mistaken amount is one thing. A messy, unexplained restriction on your whole financial life is another. Now let's clear up 5 common myths. Myth number 1, if the money is in my account, the bank cannot stop me from using it. Not true. Banks can restrict access for several legal and contractual reasons. Myth number 2, no warning means it must be illegal. Also not true. Some freezes happen first and explanations come later because the bank is responding to a legal order, suspected fraud, or compliance duty. Myth number 3, if my account contains benefits, all of it is protected. Not necessarily. The source of the money, how it was deposited, the type of debt, and state law can all matter. Myth number 4, a frozen account means the bank thinks I'm guilty of a crime. Not always. Sometimes it means a robot made a bad call. Sometimes it means a creditor won a judgment. Sometimes it means the bank posted money by mistake. And myth number 5, once the bank freezes the account, there is nothing I can do. That is probably the most damaging myth of all. In some cases, speed matters more than almost anything else. Notices have deadlines. Exemptions have procedures. Fraud disputes have timing rules. Tax levies have short windows. Complaints are stronger when your records are fresh. So, when should you escalate outside the bank? If the explanation is vague for too long, if the bank ignores obvious proof, if protected benefits were frozen improperly, if garnishment rules were applied incorrectly, or if the bank's answer keeps changing, escalation becomes important. One option is the Consumer Financial Protection Bureau. The CFPB accepts complaints involving checking and savings accounts and other consumer financial products. The agency says it sends complaints to companies for response, and most companies respond within 15 days. That does not guarantee you will win. But it creates a formal record, and in many cases, that alone gets more attention than another phone call to general customer service. If your bank is a national bank or a federal savings association, the Office of the Comptroller of the Currency may also be relevant. The OCC's consumer site explains that it assists customers of the institutions it regulates. So, figuring out who regulates your bank can help you aim your complaint in the right direction. And if the freeze threatens your rent, medication, food, or utilities, look into legal aid quickly, especially if benefits, debt collection, or court process is involved. This is one of those situations where waiting politely can cost you more than speaking up early. Now here's where the practical side really matters. The best time to prepare for a freeze is before you ever have one. If you receive federal benefits, direct deposit matters. It can trigger automatic protections in certain garnishment situations. Keep copies of important account agreements and loan documents, especially if you have more than one product at the same bank. Read notices from creditors and tax agencies, even if you hate opening those envelopes. If possible, avoid keeping every dollar in one place. That is not legal advice. It is simple risk management. One account problem should not instantly shut down your whole life. Be careful with check deposits from strangers, online buyers, job offers, or anyone pressuring you to move money fast. A lot of account freezes begin with classic check scams and payment scams. Monitor your account often. The sooner you spot an unauthorized withdrawal or a suspicious issue, the better your position usually is. And keep records that show where key deposits came from. If you ever have to prove that money was from protected benefits, wages, or a legitimate transaction, clean records help. Suppose you're watching this after the freeze already happened. Take a breath. Your next move does not need to be dramatic, it needs to be organized. Write down the date and time the restriction appeared. Save every screen and message. Call the bank and pin down the type of action. Ask whether part or all of the money is restricted. Ask whether a notice exists. Ask whether the action came from fraud review, legal process, setoff, error correction, or sanctions compliance. If benefits or an unauthorized transfer are involved, say so immediately. Then match your response to the reason. That is how you stop panic from turning into missed rights. Because the real danger is not just the freeze itself. The real danger is confusion. Confusion makes people miss deadlines. Confusion makes people say the wrong thing. Confusion makes them ignore notices that actually explain how to get money released. And one final point, this video is about general legal education, not personal legal advice. The exact rules can change based on your state, the kind of bank, the source of the money, the kind of debt, and the reason for the restriction. But the overall lesson is simple and worth remembering. Yes, a bank can sometimes freeze your money without warning. No, that does not mean the bank always did it correctly, and the fastest way to protect yourself is to stop thinking of every freeze as the same problem. Find out what kind of freeze it is, find out what law or contract is behind it, then act in the lane that actually applies. Because if you ever open your banking app and see that awful message saying your account is restricted, the people who recover fastest are usually not the ones who panic first. They're the ones who know what questions to ask, what rights may still protect them, and what to do before the next business day disappears.